Welcome to the breakout session. Hope everyone enjoyed that opening dialogue. I very much did. I could have coffee with Patrick and Pamela for a few more cups of coffee with them to discuss all of that. But I think the main idea there was to kickstart the whole conversation throughout this event. And this session will focus on, as I mentioned, how different insurers are implementing their respective sustainability risk frameworks in their business. And this session will also be the launch pad for the first ever guidance to manage ESG risks in the insurance business with a focus on non-life insurance or property and casualty insurance. So I'd like to introduce the speakers for this session. So we have James Wallace, the insurance lead on ESG integration at Allianz. James is really the driving force behind the PSI ESG guide for non-life insurance. And but before that, he'll be talking about Allianz and its journey. We also have Swiss Re, Zurich Insurance Group, and Helga from Mapfre in Brazil. Just to give some context again, these are the only slides you'll see are the slides from me to give some context on this session. So the different insurers will share their respective stories on their sustainability risk frameworks, but the guide that we're launching today is this guide on your screen. It's optional guidance for any market participant to assess based on its business. It has different sets of aims, whether to support ESG information in engaging with stakeholders or understand what's the most material risks, all the way to contributing more strongly to sustainable development. Let's move on to the next slide. And this is, collaboration is key. This was highlighted in the opening session. And this effort was co-led by Allianz and UNEP. But you can see who's part of that. And we're very happy to have insurers from different parts of the globe, also industry associations like the American Property Casualty Insurance Association, and also academics involved in this effort, both in Australia and the US. Let's go to the next slide. And so this ESG guide for non-life was really a multi-year process. It was a very comprehensive process. We had to interview underwriters and brokers and risk officers around the world. We did the first ever ESG survey on non-life underwriting. We discussed this agenda in different PSI events around the world, including an event in Africa a couple of months ago. So really all regions. And we came up with draft ESG guide that was up for public consultation for a good number of months last year, and before we concluded this guide. And next slide, please. And so just to help people visualize the guide, you can see that guide at the PSI website, unepify.org/PSI. But just to visualize what is in that guide, there are basically 8 areas where, in that guide, showing 8 areas where an insurer can carry out possible actions to manage ESG risks in insurance business. And that could go on from developing your ESG approach and establishing your ESG risk appetite. How do you embed this agenda into your organization? Who has responsibility and roles for this? How do you escalate ESG risks to decision makers in the organization, from the transaction level all the way to who has to make a call on that in the company? And also detecting and assessing ESG risks through to reporting on these issues and decisions on these issues as well. So I won't go into much detail, but it gives you an idea on a systemic and systematic way to look at the agenda of managing ESG risks in non-life insurance business. We go to the next slide, please. And the other thing also is that it has an indicative heat maps, putting ESG issues like climate change and biodiversity to controversial weapons, side by side with economic sectors and lines of insurance business. So there are two indicative heat maps there to give an idea of, potential risk, whether it's potential risk, elevated risk, or a high or duress risk. And this is based on the process that I described earlier in terms of the global survey, interviews we've conducted, and the assessment by the project team. It is an indication, but it's an interesting part of the guide itself is to see these heat maps. So with that, let's move on to our discussion with on this topic. But before I go to James Wallace of Allianz, I want to. We have 3 online poll questions for this, and the first question that we want is to ask is: does your company have a sustainability ESG risk framework covering its insurance transactions? So obviously, this will apply to an insurance or reinsurance company. But we would like to assess, based on who's participating on this event right now, who has a risk framework and who doesn't have. And obviously this is anonymous, but we just like to get a pulse. So we have a bunch of, we have around 20 right now. It seems like a 2/3, 1/3 split as we speak. Okay, we'll give it some time as people vote, and I will revisit that. But it's suffice it to say, not everyone has a sustainability ESG framework out there. So there is interest to have this agenda. So let's move on to our discussion, and let's start with James Wallace of Allianz. James, thank you very much for your leadership on this agenda, both at the PSI level and also at your company Allianz. Let's start with the journey of Allianz on sustainability. And I know you can't participate by video, and you're participating by phone. Carry on, James.
Thank you, Butch, and good morning, everyone. Yeah, sure. So Allianz now in 2020 has a pretty robust ESG approach. As the earlier speakers were saying, we're actually public with our ESG framework, so you can see how we run our process, different concerns and risks that we have by sectors, and the kind of ESG issues we're busy screening for in transactions. We publish the number of transactions we screen each year, about 600 approximately a year, which sort of 1 to 2 levels towards the group. We have a fairly good group oversight now on the risk appetite for ESG issues that we want to see and are concerned about. We now have specialized centers in our industrial insurance business, our trade and credit insurance business, our investment arms as well, who are more actively involved in the day-to-day integration in those specific businesses. And we're certainly moving to a more digital approach where we're trying to use data and pre-populated lists of companies which are of a concern or are green-lighted to go. So this is something that will happen more as underwriting becomes more digital in time. But, it wasn't always like that. And where we came from back in 2012 was in one of the general meetings of the shareholders, we started getting a lot of interesting questions for the first time. Are you involved with certain mining companies? Are you involved with certain hydropower projects? What's your position on food commodity speculation? And the board were unprepared for this. We had no ESG approach. We didn't have clear positions. We didn't know what we were involved in between the different business divisions across 70 countries. And, this was sort of embarrassing for the board at this point. And the upshot of this was we were being accused of things which weren't true all the time. Certain things were being published in the media which weren't entirely accurate. And we were just very slow at putting forward what our position was on things and what we were actively involved in. So at that point, the board took the decision, right, we're going to set up an ESG office, we're going to set up an ESG board, and this was the start of our journey, really, in trying to sort of resolve this. We developed quite quickly a process, a risk appetite, and guidelines over the next year to really set out and organize what we were doing and how we're going to do it. And we also set up a cross-functional ESG working group to develop a consensus-based approach to developing those guidelines for the first time, because whilst you might have this senior board level support and this sort of grassroots and public level concern, the real detail happens with all the technical expertise and underwriting and risk in that middle of the business that you need to engage to get into all the practicalities. So, we've come from a place where in 2012 we were actually one of the most criticized financial services organizations in the world, to now in the last 2 years being one of the top sort of 3 most praised financial services organizations in the world. And that sort of, in a nutshell, is our ESG journey to date, Butch.
Thank you so much, James, for for your transparency. I think not everyone probably knows that story from Allianz. The certain things being started at annual general meetings, and also the candor on how you came, what was the experience for Allianz at the outset, and how you overcame this. So, James, just I know it's unfair to ask in such a short setting, but in that, looking back at that journey, I mean, you started from nothing to something, from one of the most criticized to one of the most praised. What have been the main challenges in developing your sustainability risk framework that you encountered, and what were the things how did you overcome these challenges? I know that each company has its own experience, but I guess from your own looking back at the Allianz journey, what was those key moments where that was really tough, but we overcame that element?
Sure. I mean, with any of these process, getting started, getting that first draft down is the hardest thing. And when we were getting started, there wasn't a whole lot out there in the market. There was virtually nothing. You look at banking and investments, they had lots of guidance, lots of reports, lots of publications. For actual industrial and commercial insurance, there was maybe one working paper, one partial guide looking at a few indicators. Swiss Re were active at the time, but aside from that, there was absolutely nothing. So just really getting started at that point, there was a lot of effort for us, and that was one aspect, spending that time, and in some ways that's what the guide does. It gives everybody that starting point to get a jump start. I think another key part was the fear of change and the fear of more sort of control, or we were going to be declining lots of business, and that was certainly the case for underwriters who do an excellent job under huge amounts of pressure to meet sort of deadlines and targets and the client pressures that they deal with. And by actively involving them in the shaping of the guidance and the process, this was critical to gaining acceptance. Mm-hmm. So we sort of empowered them in that consensus making approach. And I think the final thing I will touch on, that there was a real fear that we were placing additional restrictions on business because of our reputation risk exposure on underwriters, and whether this would make us be difficult to deal with in the insurance markets, whether it would make it broker relationships more challenging. But certainly we've tried to make that process as painless as possible for underwriters. We've tried to automate much of it, tried to have the central teams to take the burden off them as well, and tried to make it as light as possible. So trying to make sure that these things aren't jeopardized as much as possible.
Thanks very much, James, for those really interesting insights from an Allianz perspective. Let's move on to Swiss Re, and we have Thierry Corti, and who's going to share with us the Swiss Re journey. I mean, Patrick alluded to some of it earlier, but I think the implementation part and of the sustainability business risk framework of Swiss Re is also the focus of Thierry's intervention. Thierry, floor is yours.
Yeah, thank you, Butch. And you're right. So Patrick mentioned already that Swiss Re has more than 20 years of experience in this area. And as he also mentioned, it started out as a holistic view on risk management. So the realization that risk management is about more than financial risk, underwriting risk, and that it makes sense to look at it holistically, including sustainability risk. The question of motivation for a sustainable business risk framework always comes up, and they're different ones, and maybe all kinds of motivations that you can think about have been valid also for Swiss Re over the past 20 years. You know, be it questions at the AGM, like James mentioned, or regulatory questions, like we heard from EIOPA. At the same time, as Patrick mentioned, you know, the conviction that sustainable business is good business in the long run, and that creating value goes beyond creating economic value and includes societal and environmental value. That's a big part. Also over time, you know, in the last 20 years, the entire framework at Swiss Re has grown. And Patrick mentioned that already in the beginning, there was attention paid to integrating the process into the risk management processes and using the governance that's there. And I think that's also something that's key. You know, it's not just a few sustainability experts doing their thing on the side. It's really integrating it into the organizational setup. Also, what changed over time is the focus areas. At the moment, we think that everything's about climate. That hasn't always been the case. And even today, it's not just about climate. In the past, there was a time where we heavily focused on forestry, on hydropower dams, then on human rights. The Rocky framework might ring a bell with most of you. And so this helped us, based on the foundation of a framework, based on governance and process. This helped us to build step by step, add a policy, add an umbrella framework, and so if I look today, where we are today, we have a real ecosystem. This sustainable business risk framework at Swiss Re is an ecosystem that has policies, that has a process, that has a team of experts, that has an escalation process. And it is at the same time old and established, but it's also young because we added and we pruned. We also cut away pieces. You know, we replaced manual processes by automated processes. We came to limits and we overcame them by changing the system. So I think that's probably also why with our ecosystem now and by having been the first in this area probably, that we have also big interest by clients, and it's always a pleasure, you know, to talk and also to learn from each other. Because if you've been around this area for 20 years, you might sometimes also think that you know everything, and it's then also great to have clients with a fresh mind come in and or other interested parties and to talk to them and learn from each other.
Thank you, Thierry, for those insights on Swiss Re's journey. I'm seeing a little bit of thread already between Allianz and Swiss Re in saying that, I think you had to start with something, but it didn't mean that that's an end-all, be-all exercise. It seems like over time you adjust and shape and your framework with input from clients and stakeholders and employees as well. It seems like this has been the strategy for Swiss Re, especially because you have made this your framework public for such a long time. Can I ask the same question also? Like, what has been most challenging for Swiss Re in getting this framework going? I'm sure it wasn't smooth all along, all in every aspect, but what were some of those bumps that you think were really that Swiss Re experienced along the way that you overcame?
Well, with 20 years of experience, neither Patrick nor I have been around since the beginning, so I can't speak, very far back. I know that the creation of the policies, because they were industry first, many of them, was challenging, and that was true also at the time when I joined the team. That was 7 years ago. The biggest challenge I remember very vividly was that we had a system in place that put heavy emphasis on expertise and manual referral processes. So at the one time, we had more than 500 referrals coming to us in a year, and they needed manual treatment. And that just overwhelmed the team. So we realized that for the next step, and because we wanted not to cover 500 or 1,000, we wanted to cover all our business in the end, all our transactions with the assessment, and we couldn't keep on hiring experts. So for us, the hurdle there was to realize, the importance of data, the importance of automation, the importance of integrating the process into the underwriting process. And if you're an insurance company starting out fresh today, you might not have that issue in the beginning, and you probably also don't need to worry about it. For me, that's more the frontier than where we are at. It's the tooling and the data sourcing issue.
Thank you, Thierry. So the tools, the data, making sure not to overburden underwriters and risk management folks on this agenda. And I know this is one of the points that James had pointed out when we were developing in the guide, agenda of thresholds also. When do you really have to, at what level do you set that threshold, etc.? What's your risk appetite, etc., etc.? So I think these are already very interesting thoughts, but let's add a third one from Zurich Insurance Group, and we have John Scott, who is the head of sustainability risk. John, tell us your story.
Yeah, so it's quite similar to what both James and Thierry have talked about. For us, it was about 10 years ago when, as a board, we signed up to the UN Global Compact. And that really is a great thing for us in terms of a guiding sort of set of principles around environmental issues, taking the precautionary principle around that, around societal issues, in particular, eradicating child labour and forced labour. And then on the governance side, really being very clear about a stance on anti-bribery and corruption. And of course, it's great to sign up at these principles at a high level, but somehow you have to operationalize them deep in the organization. And for us, that was also a time when we signed up to the Principles of Responsible Investment, another UN program in parallel with the PSI. And it really made us think really hard about, well, what are the things that matter to us? And also, how do we implement that in both our investment and our underwriting processes? And I think at that point, we were really guided by three aspects of setting our risk appetite. One was about risk and return and using external data from third-party providers where we could find it, and data that was reliable. Two, really thinking about reputation risks, not only our reputation risk of being associated with these often difficult ethical issues, but also our customers and our intermediaries' reputations of being associated with them as well. That's especially on the underwriting side, but also our investee companies on the investment side. And then finally, a kind of materiality assessment to really think through, well, what is it that our stakeholders are interested in? Our investors, our regulators, our customers, our employees, the communities we live and work in. And what is it that we actually do? What can we actually influence in terms of outcome? and that becomes a real guiding principle for us. How can we actually drive a positive outcome in these areas where we have concerns? And so we created a very similar process to both Swiss Re and Allianz. Initially we called it our corporate responsibility and business transactions process. We recognized this had to be happening at a transactional level. We have hundreds of thousands of transactions in a year. And we would, in terms of implementation, had a very big challenge. I mean, how do you do this? Do you do it in a way that's top down and you set thresholds and you have an expert group just like Thierry was talking about? Or do you empower your underwriters, your frontline people, give them enough information to understand whether a transaction does have sustainability issues associated with it that they need to think about, and which they could deal with almost instantly by deciding either not to be involved with a transaction or to proceed but with conditions. And only in certain extreme circumstances actually have to refer to a central group, or actually we didn't have a central group. The way we originally set it up was just to follow the normal underwriting referral routes, so that they would go to their local underwriting management and of course business management. And I think the other really important principle for us that we discovered was that this is not about declining business. I think often when you create these kind of positions on sustainability issues, many of our colleagues will just see it as look, this is just another excuse to not do business. Along with many other things, sometimes we find as hurdles that we don't like a risk or a transaction. And we worked really hard to say, no, that's not what it's about. This is actually about being engaged with our customers. And this is a very customer-centric activity. And I mentioned third-party data. It's really interesting. Often we will get either data providers or we'll get some insight from civil society, somebody coming to us saying, we don't like what you're doing or what you engage with. And I think James mentioned this, often our boards will get either a journalist or an NGO or someone coming to us saying, look, we don't like what you're doing. And it's really interesting when you actually go and talk with your customers or your investee companies, because you have these deep and often long relationships with them, you get a completely different picture. You get a picture of people who are engaged often in these, because of the nature of their business, with these very difficult topics. And have found ways to manage them. And of course, not everyone is great at it. And what we can do as insurers, and I think this goes back to your first slide you put up, Butch, the sort of triangle of saying, what is it that an insurer can do to influence, through our investments, through our risk management, through our risk pricing, as Pamela was talking about from an AOPA perspective. We can speak with our customers and bring with them the best that we've seen of how people deal with these issues and influence change. And that's what I mean about outcomes. We should really see this as an opportunity for all of us in our sector to really influence change and really get the right outcomes we're looking for in sustainability issues, whether they're to do with the environment, in particular climate change at the moment, but also plastics and the circular economy, or whether it's about societal issues like child labour and forced labour, or human rights breaches in other ways. And of course, a really strong position on governance. So that's really what we've been going through the last 10 years, Butch.
Thanks so much, John, for those insights. And I think you mentioned a number of similar things as James and Thierry, but you also highlighted a few things which I thought were very interesting, which is the power to engage, and whether as an investor or as a shareholder, but also the power to engage as an insurer is more often than not, engagement is deemed to be in the context of shareholder engagement, but the power of an insurer to engage with clients is also there. And I think these are the insights that are driving practices that ultimately mean, and I think that's very interesting. And also the fact that you mentioned the UN Global Compact principles on how the seemingly high-level frameworks on sustainability can actually start trickling down into implementation and practice through frameworks on sustainability. Thank you very much, John. I also just wanted to check with you. You mentioned some. What is that challenge? That one challenge that you believe was very that you overcame. That's very instrumental at Zurich to get this. You mentioned about this not only about declining business, etc., but also about engagement and customer focus. But what are your thoughts on that key challenge that you overcame in Zurich?
Yeah, I think there's two really. One is about automation. I mean, there's this challenge between having this deep engagement, which takes a lot of time, and in a world where, especially at a transactional level, the requirement for the underwriter to come up with a price or accept or deny a piece of business is very short. I mean, maybe it's 24 or 48 hours. So not much wiggle room there to engage with a large group or a group of experts. So the desire to somehow put in thresholds and limits and put that into the underwriting system so that flags for underwriters and almost automates the decision, and balancing that with the engagement piece. And of course, we can't engage with every customer on every transaction because, quite frankly, for the vast majority of our transactions in general insurance, this is an intermediated industry, and our partners in the broking industry are the people who really talk with the customers most of the time. And that's the other challenge, is engaging not just with as primary insurers or secondary insurers, but with our broking partners as well, so that there's a kind of three-way. I always think that it's a bit like a three-ring circus. You have the insurer, the customer, and the broker. And then somehow you have to engage with all three to have a good outcome. And that's still a challenge, and it's something we're working on with our colleagues in the broking part of the insurance business.
Right, and that's another interesting point, the role of brokers on this agenda, John. Let's go back to that later on. So let's move over to another part of the globe, to Latin America. I mean, the lockdown is, the borders are open again, so I think we can go virtually to Brazil now, and move and hear what Helga Tomagnini, who's with Map for Brazil, what has been the journey over in Brazil on this agenda. Helga?
Thank you, Butch. Thank you for this opportunity to stay here. For at least 10 years, sustainability was already part of Mafre's business. We had declared in our strategic drivers that we are interested at ESG aspects, and we would like to demonstrate the valuable role that our insurance industry could play in the economy and society, and give our contribution to sustainable development. So we think that we must give the example, and we started by promoting sustainability academies for our employees and some customers to address ESG risks and opportunities. I think it was the start, and we got maturity to give the next step, and MAF became signature to PSI. Whether for the strategic question or for the commitments assumed, for example, the PSI, we must act. We had principles for sustainable insurance to implement, and it had an initial focus on knowledge to construct a technical guide of procedures to integrate ESG aspects in our non-life insurance business. After that, we complement our framework with the context of various processes of our business. Our risk management model contemplates operational, reputational, financial risks, as well as environmental, social, and governance risks. We pay attention to ESG risks, climate change, pollution, human rights, controversial weapons, bribery, corruption. And I believe that we had some challenges to implement our sustainability framework. First of all, to get knowledge, because we had to mitigate or address our risks and opportunities, and we need good sources of information. It's necessary that we have market information and our information in order to have criteria for comparison and choice of our risk appetite. It's necessary to get information to define what's important to our organization. It's the principle of PSI. What's the important for your organization? We live in a world where enormous amounts of data are being processed at increasing rapid rates, and identify and mitigate risks is a challenge for any company. For MAF, it's not different. Another challenge is to demonstrate that the benefits of having an active role in developing an ESG approach beyond reputation risk mitigation, and but it will also can bring longevity and even gains for the insurance business. Nowadays, we understand that the stronger internal ESG expertise can lead to a competitive advantage in engaging and supporting clients. Our goal was to develop a risk management culture where employees and stakeholders are aware of the importance of monitoring and managing risk, including the ESG risks and the opportunities. In the beginning, we had few benefits as financial results, even due to the natural barrier of not denying a business only due to ESG aspects. Then, with the maturity and the organization of the topic at MAFI, we began to see the correlation between these ESG aspects and the results and our clients who had a greater or lesser chance of claims according to the ESG exposure. I think the image risks also started to become very evident. People not allow or even tolerate companies that do not have solid social environmental principles. This can even make us lose new sales of insurance policies. Right. In summary, we are aligned with the achievement of our objectives, and our insurance customers minimize losses and enhance opportunities.
Thank you very much, Helga, from that perspective in Brazil. I think one thing that I got from what you said that is very interesting is there is a need to build knowledge and expertise on sustainability issues. And you mentioned what you were doing in terms of sustainability academies for your employees, etc. So obviously, before you can preach to others what sustainability is, you have to start from within. And I found that very insightful because not everyone would be familiar. I mean, in the opening dialogue, we had a whole bunch of sessions there. Not everyone is an expert on human rights. Not everyone is an expert on controversial weapons or biodiversity. So I think it was a very good insight from you on how MAPRE built knowledge from within and also empowered its people to get this agenda going. But I'd also want to ask you that main challenge that you think when you were implementing this, developing your framework, what has been some of the toughest challenges for you? Particularly, sometimes if you look at the media, you see a lot of the news about, in emerging markets, about, large-scale infrastructure projects affecting natural ecosystems like forests, etc. What have been big challenges for you in implementing your framework in MAPRE?
I think it's the to convince people to develop an approach that it's not easier to demonstrate the benefits of having an achievable in developing an ESG approach. I think when you don't have the culture of risk management is challenging. But MAPRE has a stronger risk manager, and we believe that it's not the ESG aspects. It's not a thing that you put on site of our business. We need to do this with our business, and I think it's the thing that convince people, and knowledge is so important too. Because of it, we develop a guide to implementing actions or ESG aspects to our underwriting process, to our claim process, and I think the implementation, it's not easy, but it's doing. We are doing this well.
Okay, thank you very much, Helga. I think that also you highlighted the importance of co-ownership, that this is not simply an agenda for the sustainability team or one person in the organization, but really for all employees, and making sure that the practitioners who underwrite insurance transactions and the risk managers are involved in this process. This also chimes in with what James was saying earlier, Thierry and John as well, as part of the process. And so this co-ownership and empowerment, and also articulating what are the core benefits of doing this for the organization are some of the core elements to get it going. So thank you very much. At this point, I wanted to actually go and ask the second online poll question. Having heard our four speakers, on the first question, I think on if you have a sustainability framework, there was a 60-40 split, roughly, the way I saw it, of around 200 people voting. Now, the next question is, do you think that every insurer should have a sustainability ESG framework? This is, having heard the four speakers right now, we'd like to see what you think. So let's have a look at the how it's going. So far, based on 34 voters or 37 voters and counting, it's 100% yes. 45 and counting, 48 and counting. Let's see if there's gonna be someone who will spoil the party. There is someone who did say no. So vast majority at the moment is 98%. There's 2% out of the 65 right now. So that's very interesting. And obviously, each person and organization is entitled to his or own perspective on this. But it's we wanted to see what's the pulse based on the audience participation right now. So let's So it's 71 and going, 99 and 1%. So we pretty much have a good picture of what's the answer to this question. At this point, I also wanted to engage a few stakeholders to intervene and ask questions and make a comment. And the first one is Dave Snyder. Dave Snyder is Vice President for International Policy at the American Property Casualty Insurance Association. We're also very happy that APCIA was part of the PSI project team that produced this guide. So it would be very interesting to hear some thoughts from the US and also a market association like the American Property and Casualty Insurance Association. Dave?
Thank you very much. And let me just say that it has been a great honor to work with the industry leaders in the area of sustainability. I especially want to recognize, Butch, your work and Olivia's and the UN's work in this area, and as well recognize the companies that have participated in this effort and the companies that everyone has heard from today. You know, sharing experiences is critical to addressing all of our issues, and that's a classic example of what's occurred in this case. We note that the entire document that's being launched today is, of course, totally voluntary and optional, but it does provide a good source of lessons learned from some of the industry's true leaders in the area of sustainability. And so we hope that it will be useful to all companies, large, medium, and small, as to how to first understand what ESG and sustainability is all about, and then how to begin to look at that and integrate it as they see fit in their operations. So again, it's been an honor to have been able to participate, and we recognize the great leadership shown by all the companies involved. Now, my question, I guess, for the group is if you wanted to leave a single message about the most important lesson that you've learned, could you provide that to the people that are listening in and that may look at this in the future? In other words, sort of collapse everything that you've said, if you could, into the one single lesson learned that you would like to communicate to others, perhaps in the public and to others in the industry. And again, it's been an honor for us to have participated in this great venture. Thank you.
Thanks very much, Dave, for those insights. You actually stole a bit of my closing question, but that's great. I mean, you read my mind as expected. But why don't we ask James to share with us his thoughts? James, you've also engaged with Dave along the way in the project. I think it would be interesting to give your insights on that.
Yeah, sure. It's tough to come up with one, isn't it?
Yes.
You know, on the one hand, I think keeping it practical and simple, which is really challenging, but at the same time very important, because, you know, we try to make our questions and screening criteria for the manual ones, you know, yes or no answers, or, you know, keep it down to one page at most for the guidance, so you're not reading huge documents, and just really talking plain English and language your audience will understand. It's so often the key failing of sustainability to talk in a completely different language to the audience you're trying to get to change, and that's really critical. You know, I think as well, I'll go back to the point that you really need to engage the middle sections of the organization, not the grassroots, not the top. Often these things are fine, but the real technical experts is what can make or break a process. So I will leave it there.
All right. And Thierry, did you want to add anything about that? Yeah.
Sure. I mean, as James says, it's tough to come up with one. So I rather stay a bit general. And so for me, if we see that 40% of the participants work for a company that does not have yet a framework, let's not ask why. Let's just say do it. As we heard today, there's plenty of motivation why it's a good idea to have such a framework. We have the guide now, we have the experts in persons, and we have the experts in terms of organizations that have the expertise and the experience. I see that everyone on this call and everyone around is willing to share, to help each other out. So it's probably a daunting outlook to get started somewhere, and it sounds maybe abstract also after you've read the guide. So get down to practicality, do it. You can do it. It's really once you've made the first step, it probably will not be that hard as you think it is. And maybe you think it's easy for me from Swiss's perspective to say that, and we have our nice ecosystem, etc., as I've described. At the same time, I think, if you're starting from a blank canvas with the guide, the expertise, and everything you have at your disposal now, I think that's actually an exciting and interesting and fulfilling journey that you're embarking on. So do it.
Okay, that's plain and simple. Just do it. Thank you, Thierry. Let's also, before we move on, I also wanted to engage another stakeholder, this time an NGO, WWF. And for this intervention, we have Amendine Favier from WWF Switzerland, who is the head of sustainable finance. Amendine, are you there?
Yes. Hi.
Okay.
Butch. Hi. Hello, everyone. Yeah. So many thanks for letting me the opportunity to come with a few comments or remark, and really thank you to really all the speakers for the very interesting comments, and it was very interesting to me, and I think for the audience, to hear the different journey or ESG journey from different insurances. And so concerning more the guide, I think generally the guide is very welcome from we'll say an NGO or environmental NGO perspective. It's the first guide for non-life insurance business, and I think this is something we should not underestimate, as non-life insurance is really key for I think at reaching our target of sustainable development or target of fight against climate change and biodiversity loss. So this is really welcome. And the guide is really flexible enough. We think that it can really accommodate different industry or different insurance at different stage of the ESG journey. And we saw also today in the panel and with the question that not every insurance is at the same stage, and that's very important to have such a guide that can really accompany them in the journey. When looking at the guide, what particularly personally found very interesting, it's a heat map at the end, which I think give a very good level of granularity and makes the guide very tangible. And we all know, I think, that when talking about ESG policy or an ESG framework, the challenge is always in the implementation of the policy and the framework. Not that drafting a policy is easy, but usually the implementation gets really tricky, especially when we go to talking to not only insuring project, but insuring general insurance or insuring company generally. And here I think there's some very interesting tool and instrument that the guide is mentioning, such as spatial finance or satellite data, geographical data, that can not only help to know where a company has a project or where a project on infrastructure project or asset is taking place, but also where do a company have different industrial assets, and that can really help. I think such new data can really help into pushing the ESG journey further. And it's something that is currently discussed, I think, in the other session, but I would like to also underline here because I think it's key. Concerning the different issue, it was very interesting for me to hear during the poll at the beginning of the session today that on the three key issue or risk or sustainability risk issues, the three mentioned were climate change, biodiversity loss, and pandemics. And I find it really exciting and interesting because those three risks are actually quite interlinked. And we know that a lot of different pandemics are indirectly linked to a loss of biodiversity, and that makes that some domestic species or domestic animal are getting into interaction with some wild animal, that this interaction should not happen, and that and then this goes back to human, and virus are getting transported that way. So it's very interesting, and it's also something that it was really recognized at the WEF recently in their last risk report. If you look at it, it was the first time since the WEF do their annual risk report that on the top 5 risk in terms of likelihood, they were all linked to environmental issue, and biodiversity also had quite a predominant place. So it was very positive for us to see that the guide and the ESG guide and the heat map also recognize not only climate change but also environmental degradation, biodiversity loss in terms of species loss, and in terms of threat to World Heritage Site and key area. And just so people understand maybe a bit like what the current is thinking, and when I say that those risks are interlinked, we know that we know that biodiversity loss is getting accelerated by climate change effect. And we see that, for instance, with our coral reef are disappearing on a 1.5 degree world. It's a 70% decrease in coral reef, and we know that. But like the other loop is also true, and that's something which is a bit more or less discussed, that biodiversity loss also accelerate climate change and accelerate our likelihood to fight against climate change and to mitigate and to adapt to climate change, because you're losing in nature-based solution. Basically, the most biodiversity, the more you lose into biodiversity, the more you lose into ecosystem that helps you to really absorb carbon. So, and then you have more climate change, and the more climate change you have, the more biodiversity loss you have. So it's really a vicious circle, and we have starting as several NGOs to look at that. It's been documented in a report that the WWF launched recently at the WEF together with PwC, called Nature is Too Big to Fail, where we really try to look at this what we call negative spiraling loop between climate change risk and biodiversity risk. And the key message here, it's like kind of an explosive mix of risk, which is not really taken today into account in any model, in risk model. And we think those two fight, let's say climate change and biodiversity, needs to be taken together. It's not one or the other. They're really interlinked. And it was just interesting to see that in the last report that the NGFS published last week, their supervisory guide, they also mentioned this negative spiraling loop, they call it, or feedback loop between climate change and biodiversity risk. And I think it's quite key to important, because I do feel that if we take into exchange this spiraling negative loop, maybe some category of risk we see in the guidance, or in the guide, in the Allianz and PSI guide, maybe some risk will maybe increase from a yellow to red, actually. And it is because it's very dynamic, and we're currently, on this topic, we're currently really thinking about it and discovering what the real interaction are. And especially now, if you take into account the pandemic as well, which was the third risk mentioned, I think it gets into a quite explosive risk of risk today. But with this, I really want to thank the great work of the PSI and Allianz and all the insurance involved in developing the guide, because like I said at the beginning, I think it's really important to see a guide on the topic of non-life insurance.
Thank you so much, Amendine, for the engagement of WWF on this process. And I know other WWF offices are engaged with different insurers around the world, but also for connecting the dots. I think it was very important that climate change, biodiversity, pandemics, those top 3 issues are actually quite interlinked. And what we learned in the first event was that, science is at the forefront of this in terms of climate science, biodiversity loss, and understanding planetary science in its entirety and how the oceans, forests, and the atmosphere interact is really key to understanding this whole agenda, rather than simply siloing each and every issue to be an independent issue. So I think that was a very interesting thought. Now let's, before we have a little over 10 minutes before we end the event, and I'd like to go to our final online poll question for this session. And so please vote. Question is, which of the following stakeholders can promote the development and adoption of sustainability ESG frameworks by insurance companies most effectively? Select one only. So ultimately, insurance and reinsurance companies have to manage sustainability issues. So the question is, which of the following stakeholders can promote the development and the adoption of these frameworks by insurers and reinsurers most effectively? So it's only one option to choose, one selection for you out of the different stakeholders. So it would be interesting to hear that, whether it's insurance associations, regulators, brokers, intergovernmental organizations like the UN, shareholders and investors, or NGOs. Early voting says out of 21 votes, 25 and counting, around 60% are saying regulators and supervisors have a key role to play. But alongside that, market bodies like insurance associations and also investors. Okay, so the votes are keep on voting. I think that's really interesting insight. And I'd like to take this opportunity also to actually engage again, ask a question. Dave, are you still there? I wanted to ask you, because you are a market body, what are the things that we can do together going forward on this agenda, given that insurance associations have also been recognized to be key in driving this forward?
So we all recognize that all of our jurisdictions have antitrust and competition laws. So we work within that framework, and that's, of course, fundamental, which is why there were a number of places in the document where we stressed the voluntariness of it. I think this is a classic example of how lessons learned by leaders in a field can be shared in a way that's highly constructive and allows each company to take a look at it, examine it based upon its own realities, and make its own decisions. So I think there's a real value here of the information that the global leaders, including the UN, of course, and the companies that have been involved in this project, can share with the broader industry, if you will, providing lessons learned, and then allowing them, again, each company to apply the lessons as they see fit. There is general understanding that these issues are terribly important, and insurers want to be responsive to the public. They want to play their critical social role. There are also business realities that have to be taken into account, and each company needs to balance that accordingly. But again, I think the real value here is not just the what, if you will, and the heat maps, like the rest of the document, if you will, are totally voluntary and are just an idea that companies are able to accept or reject. But the how in this document is fundamentally important. If you're a company that has only a vague understanding of ESG, well, where do you go to understand what that is? And what have the global leaders said about the lessons that they've learned about how to move forward in this area? So I think there's huge value to this, even taking into account, of course, that we operate in a highly competitive environment, and that the entire document and every piece of it is totally a voluntary, optional issue for each company. But again, I want to emphasize the information, the thought process, the lessons learned can be very, very important to many other companies as they take a look at these critically important issues. And I will say one other thing. From the very beginning of this industry, we have cared not just about paying a loss after it occurs, but what we can do to prevent that loss from occurring in the first place. And this whole effort is totally in the mainstream of that critical social value that insurance has. So thank you, Butch. I hope this has been responsive.
Thank you very much, Dave. And at this point, I guess we have 5 minutes left, but I do want to pick up a couple of questions from the audience. There's one question: is there a risk that ESG de-risking could inadvertently lead to reduced appetite to underwrite insurance in developing markets or for underserved groups? Perhaps, Thierry, would you like to take on that question?
Yeah, sure. I can answer that. So it probably touches at the core of good sustainability risk management, and that it successfully managing sustainability risk means showing the different perspectives, looking at different perspectives, looking at different angles. And so also at Swiss Re, we've looked at the different benefits of insurance covers. And for instance, if you look into developing countries, the right to economic development is a very important right that we maybe tend to forget over here in Europe. When we look outside of Europe, having an insurance cover is not something that you just grow up with. So we're very much used to be over-insured around here in Switzerland, at least. I don't want to talk about everyone. So in other parts of the world, having insurance cover, having access to insurance is extremely important. And, taking that away is a step you have to think about very, very carefully. And for me, that also ties back to what John said, walking away and withdrawing insurance support is the last step. Engaging, finding a solution, asking questions, hearing the other side, not just listening to allegations from one side, but also hearing your client side and taking the different perspectives, weighing the different elements. I know sustainability risk can be very confusing and complex. At the same time, that's what makes it interesting and really valuable.
Thank you, Thierry. John, did you want to quickly add on to that question?
Sure, and it's a great question. I think when we look at some of these issues, and I think the sustainability risk issues, many of them are global in extent. And if we just look at pandemic right now, the current pandemic knows no borders, and neither does climate change. So if we have a view about, say, for example, we don't want to support thermal coal power plant because we've worked out that there's no more room for emissions from thermal coal to manage within the Paris Agreement goals. But that's something that we all should take on board, and it's not something that just penalizes emerging economies. It's for all economies to have that decision. And if we can influence that, I think that's a really good thing. Of course, if you happen to live in a country that's an emerging or developing economy and you have a lot of cheap coal, you have a decision to make. You want energy security, you want cheap energy to drive economic growth and in many cases achieve the broader sustainable development goals. But it doesn't have to come from coal. And in fact, when you think about it, trying to diversify away from fossil fuel resources in a fossil fuel dominated country, that makes a lot of sense in terms of national security as well as economic development. So I think this isn't all about environment, And it's certainly not, I think, just the wealthy nation saying, these are principles that are applied just in Western liberal democracies. These are truly important global issues that affect all of us living on the planet. So I think I'd encourage all the insurers on this call who have not yet thought through their ESG frameworks, and those who have, to really think that through carefully in the positions that you take.
Right, and I think, thank you, John, and I think the fact that we also have Helga from MAPFRE in Brazil, MAPFRE being a global company and headquartered in Spain, but having an operation in Brazil, a significant operation in Brazil, and for Helga to actually articulate many of these things being relevant in a Brazilian and Latin American context is also very a good insight on how this actually is pertinent to MAPFRE as an organization. I'd like to go to James for the last question. We have a question about responsible investing practices can drive better investment performance. Is there experience to support a similar outcome for underwriting with ESG guidelines?
Well, that's a tough one. Yes and no. So some of our colleagues in our industrial insurance business have been experimenting this, whether ESG data can serve as a proxy for improved underwriting performance. And, when it's linked to a financial metric such as fines for certain malpractice, there's a correlation, there's an indicator, and you can put it in. I mean, some of the things you're seeing in the credit insurance space is actually happening. So, you can see that type of insurance cover, which has a longer term horizon. The coal companies, because of the regulatory pressure, because of the social pressure, prices are increasing there in the premium. So it's being reflected in the pricing there as the core. I think it's very difficult to do that in the same way as investment, because you're often not dealing with a pure sort of equity universe or corporate bond universe that you invest into a complete share. Often your risk is like a part share of the motor fleet or a partial share of the property portfolio in various countries. So it's harder to equate the data to losses and to your sort of share of the ownership in some way in insurance. But, I think it's interesting points that, John and Thierry making earlier about being cautious about it, but also for the smaller company, a lot should be dictated by the size of the share of your risk with the client as well. You can engage, where you find malpractice, if you've got a big enough stake in the company, but there may be sort of the size of stake that it's not worth doing that as well for the cost it incurs on your business. But, I think it's something as data becomes more and more prevalent for insurance companies beyond the investment business, because we obviously insure state-owned enterprises and small and mid-sized companies. I think this will improve over time. Certainly there's great examples, water escapes in property, certain classic issues which are there, but it's an incomplete picture at the moment, but it's improving, I guess, is my answer.
Thank you very much, James. And I know that there can be, we can continue on with this discussion, but time is scarce and we need to get going. The few final points for me that I took out from the discussion before is that, number one, I think I've known all of the companies involved before they even had an ESG and sustainability framework for their business. That shows you how young I am, but it also shows that at some point in time, they made a call and said, we need to start with something. And from nothing, they have something, and they're now sharing that something with all of us. So I think that has been insightful. And for those who may find those stories useful, in addition to that, we now have a PSI ESG guide. So there's no reason why one cannot learn not from these companies only, but also from the collective experience of the PSI in producing this guide. So that guide, it's out there. If you want to continue engaging with us, there's that email, psi-swissery@unify.org on this topic, and we'll be welcome to continue engagement. I think the final lesson for me and thought for me on this session is that we can overwrite unsustainable activities and practices and build back better by underwriting for sustainability. And that brings me to an invitation to all of you. A lot of the topics we discussed today focus on predominantly managing downside risks. But on the third event in next month on July 8th, we will largely be covering upside opportunities. How can insurance products and services contribute to achieving the UN Sustainable Development Goals? So from a largely risk narrative, we're moving to an opportunity narrative in the next event on July 8th, and I hope you can join us for that. And the final request from us is that if you have a moment and look at the next slide, in order to improve our services, this will be, we don't expect that we'll go to in-person events. We will do more of these virtual events going forward. Please give your feedback either by scrolling down to the Q&A tab and give us your feedback, or scanning the QR code on your screen. And with that, I'd like to thank the entire panel again for joining us, for all of you around the world. Thank you very much. We hope you found this productive. And we also want to say that this event today is an advanced celebration of World Environment Day this Friday, June 5. So happy World Environment Day, everyone, and be safe. And thank you for supporting the sustainability agenda. Thank you very much.